Good afternoon, everybody. Hope the week is treating you extremely well. What I wanted to talk about in this week's video is Dow Theory. Now, as you know, if you've been watching these videos, the Dow has lagged the S&P 500, the Russell 2000, the NASDAQ this year. It has not made a new high since back in January, where the rest of the indexes have all gone and made new subsequent highs. So that is what we've been paying very close attention to here over the last month or so to see if the Dow can continue to rally up and make new highs. Now, the transports, the Dow Transportation Index, went and made new highs this week. Made that breakout from the highs put in earlier in the year and made new all-time highs. Now, why is that important? Well, Dow Theory is the analysis that explores the relationship between the Dow Jones Industrial Average and the Dow Jones Transportation Average. And it's said that when one of these averages climbs to a new high, then the other is expected to follow suit within a reasonable period of time. If not, then the averages are showing a negative divergence and the market is liable to reverse course. So, a little bit of a history lesson. The Dow Theory had its original writings by Charles Dow, the founder of the Wall Street Journal, back in the early 1900s. In Dow's time, the two averages that we were looking at were the industrials and the rails. And the logic behind the theory was simple. Industrial companies manufactured the goods and then the rails shipped them. When one average recorded a new secondary or intermediate high, the other average was required to do so in close succession in order for the signal to be considered valid. If the two averages acted in harmony with both reaching new highs or lows around the same time period, then the price action was said to be confirming. However, if one average went to a new high while the other was left behind, then you had a bearish divergence. Now that is what we're paying attention for right here, right? The theory holds to this day that the Dow Jones Industrial Average, the manufacturing companies, the companies that are making goods, right? They need to ship those goods. And so when we look at the transportation index, we can see that that's breaking out to new highs. Now, this is not just all inclusive of rails anymore as it was 100 years ago, right? We've got shipping companies, trucking companies, airlines, right? A lot of different ways that goods are transported nowadays. But the theory should hold true. If the transportation average is breaking out to new highs, that's good. That means that goods are being shipped and that the shipping companies subsequently are doing well because of that. And so what we're paying attention to over here is looking for the Dow Jones Industrial Average to follow suit for the transportation average, and it's not that far away. We're about 1.5% away from those highs. So if we can make new highs in the Dow Jones here in the next couple of weeks, then we would have a very good confirmation that goods being made subsequently are being shipped well, and we're continuing to push forward, and the market subsequently will continue to be extremely bullish. If, however, we watch the Dow Jones Industrial Average not be able to make new highs here over the next couple of weeks, month or so, then we would have that bearish divergence set up, and that could subsequently lead to a potential pullback as the transports fall down towards the industrial average and not the other way around. So very interesting where we're at right here. Personally, I think that with the strength that we're seeing in the NASDAQ and the Russell and the S&P 500, that we're probably going to see the Dow make that push to new all-time highs here in the next couple of weeks. We will certainly keep our eyes open. I hope everybody has themselves a fantastic week.